I'm delighted and privileged, honored to welcome our seminar speaker for today. Uh, he is a Dutch person, so please excuse the pronunciation, Professor. Professor Thijs ten Ra.
Pretty good.
That's pretty good. Professor Thijs ten Ra is, I could read his bio for you, but let me just give you a few tidbits about him before I give the formal. I consider him as probably the most prolific economist from Netherlands. And I'm not saying it lightly. If you look at his publication and research record, last count, I think he has published something like 140 research publications in refereed journals, apart from the various other reports and manuscripts and preprints, 16 or 17 books. But that's not the only thing. Not just the sheer quantity of research publications, and of course this very distinguished and long teaching record. It's the range of fields and subjects covered in economics. It's actually really quite amazing because I know that he has worked in, for example, general equilibrium theory, some aspects of game theory, behavioral economics, and I would say even some aspects of macroeconomics. And today, as you know, he's here. We are very privileged, by the way. He has been here for a few days as part of the workshop that we are conducting on the input-output analysis. So I don't know if students here know about this subject. This is actually at one time, especially in the days of planning, development planning. Like we had our own planning commission, and in different parts of the world, we had this concept of development planning or planning for development. Input-output analysis was extremely important and continues to be relevant today. And I would submit to you that actually there's some kind of a revival of interest in this subject. So formally, let me just say, Professor Thijs ten Ra. Oh, there's one more tidbit I have to say to you, with your permission, sir. That 2 years ago, this year, Miss Claudia Goldin got the Nobel Prize for her work in economics related to women's participation in the labor force. But before that, 2 years ago, 3 economists got the Nobel Prize. I think Guido Imbens, Joshua Angrist, and David Card. Right? This I will confirm. So Guido Imbens is a professor at Stanford. I don't know. David Card is where? Maybe Princeton or something, or Angrist.
Also West Coast.
Angrist is at Princeton, yeah. So Guido Imbens is at Stanford, and of course, as the name suggests, he's a Dutch economist. He's from Netherlands. So the Dutch people, even though they're a small population, they were extremely proud, like Professor here, and they wanted to felicitate him. So they called him all the way from Stanford back to Netherlands or to Amsterdam for a very public, very high-profile felicitation function. So Guido gets up and of course he gave a lecture, but before he did that he said, by the way, he was supposed to have been trained at Erasmus University in the Netherlands. Then he got a master's degree from York University in the UK, and then he got a PhD in the US, and now he's at Stanford. So he said that actually I studied at Erasmus University. I didn't really get a degree, but all the economics that I've learned from one professor whose name is Professor Thijs ten Ra, the very gentleman here. So you can imagine, I'm really, as I said, quite overwhelmed about, if you really look at his work. We're really grateful, sir, that you're here, and we actually want to publicly again announce and invite him to come for longer periods so he can actually teach a course, or at least part of a course, for the undergraduates or graduates. So formally, he's with the University at Utrecht, but he has had stints in various other universities. He got his master's in physics and mathematics, I think from Groningen.
That's right.
And then he got another MSc in mathematics from, is it?
No, then I went to economics.
Then of course your MA and PhD is from New York University. NYU, by the way, was a place where he studied under his PhD advisor was William Baumol. A lot of people, I hope you've encountered the name Baumol in your textbooks. A lot of people think that Baumol got a Nobel Prize. But I mean, mentally he's got one, but actually technically the Nobel Committee has cheated him from, right? But there was another gentleman in the faculty called Vasily Leontiev, who also got a Nobel Prize, and he in fact worked with Mr. Leontiev. And Vasily Leontiev came to Gokhale Institute in the 1960s, that is 63 or 64, where he conducted a workshop on the dynamic I/O analysis. See, input-output analysis is where you have a large matrix with coefficients, input-output coefficients, and one of the critiques of I/O analysis is that it's static, it is not dynamic. Economy evolves over time, so the coefficients have to change over time. Input, so if you put so much input of capital, how much output comes out? So much limestone goes in, so much cement comes out. This whole economy can be modeled in the form of this, but the I/O framework was criticized because it is static and not dynamic. And Mr. Leontiev gave a seminar here in Gokhale Institute outlining an approach to how to make it dynamic. And there are people here in Gokhale Institute who actually studied this topic. So, Professor Thijs, by the way, is the winner, I think, of the Leontiev prizes, the Leontiev medal. And I don't know if we have another professor here. There's a young gentleman called Dr. Shubhajit Banerjee, who is downstairs in the workshop, who got the Leontiev medal this year.
No, that's a different prize.
That's a different prize.
Yeah.
Sorry. But
it's not a medal, but it's still a prize.
Right. So I'm not going to go through all these other, he's published in all the journals you can imagine, and he's held several positions in various associations, like the Canadian Studies in Netherlands, the Council Member of International Input-Output Analysis Association, the Chairman of Economics Committee of the Netherlands. He's got, by the way, several prizes in the Netherlands itself about honors, economics honors. So I actually urge you to see the website, which is thijstenra.nl. So I'm very happy to welcome him. Today's topic, of course, is not I/O analysis. The topic is a very provocative title, that emission taxes are regressive, so it's something with carbon taxes. And I'm sure we'll have a very stimulating conversation. And please make sure you ask him many questions. So thank you very much again. Once again, please give him a
Thank you for coming in such big numbers. I'm very honored by your presence. Emission taxes are a hot potato in politics. Economists say emission taxes are the right approach to reallocating production as to minimize emissions. But emission taxes work basically in the same way as a value-added tax. I mean, it's collected at the source of the emission, but it will raise the selling price of the product, and that is an input in other products. So those prices will go up as well, just like a value-added tax. And so prices will go up as they will reflect not only labor and capital costs and value-added taxes, but also the emission taxes. And then that may be harmful, especially to the poor people. Okay. Now the emission taxes will be directly proportional to the footprint, and the footprint of a product is the amount of emission embodied in the direct and indirect production of that product. And footprints are very popular. We all want to minimize our footprint, but there is a lot of misleading advertisements. For example, if you take a Tesla, then it is suggested that it is zero emission, right? As if there won't be a footprint. But think of the production of the battery in a Tesla. Think of the production of the electricity when you drive a Tesla. Okay? All that has to be taken into account. And only then you get the full footprint. Okay? And that will determine the increase of the prices. Now, the concern is that the poor people will suffer much, not only because they're already poor and it's difficult to pay more, but because their pattern of consumption has a relatively high footprint. And this, by the way, is for the country I will study, which is the Netherlands. And it is not necessarily true for India. And I'm very curious if someone would like to investigate this for India, and I'll be truly yours to help you. My email address is here. That's my affiliation and my email address. Okay, and as said, if you just Google my name, you'll be on my personal page, and all the data are there. So if you just jot down my name, you're all set. So in the Netherlands, for many people, the big consumption expenditure are the so-called fixed cost of housing and also heating. Okay, now heating is one of the products with the worst footprint. Okay, so and that's why I thought maybe the poor people will be harmed more than the wealthy people. But first there was a question mark, and I decided to investigate it. And basically, I had to confirm it. But again, it's country specific. I don't think the poor people in India spend a lot of money on heating. And that would be good because, then their footprint per rupee of expenditure will not be too high. So maybe in India, it's not regressive, but progressive, right? So this by way of introduction. Okay, I always tend to talk ahead of the text, so that's easy. And let me go straight to the data we need. We need the so-called national accounts of an economy. And the core of the national accounts of an economy are the supply and use table. So please raise your hand if you've heard of a supply and use table of an economy. Nobody? Okay, then I'm going to explain it. So there are U and V. And I hope you can read this. So these are the purchases by industry number 1. And they buy product 1. And then, I did this the wrong way, 81, like that. And up to product 80. So we have a column for industry 1, and we write the inputs, only the produced inputs, produced by other industries. There are also non-produced inputs, namely labor and capital services, okay? And we do the same thing for all the other industries. So this is the use table of an economy. It's also called the input table of an economy. And then the next, so it's the U of use, by the way. And the next table is the V table, simply because it's the next letter in the alphabet. And that is that's the make table, or the output table. Okay, so I'll do that one as well. No. Could you take this off?
Yes, okay.
Could you take it off?
Oh, one minute.
I don't like it. Okay, thanks.
So the camera,
Yeah.
camera.
Okay, thank you. Okay. Now, hopefully, the economy produces more than that it uses. And if you take the difference of the two tables, V minus U, you have what is called the net output table. Okay? Now, if you look at Industry 1 and you look at the net outputs, you get, I should write that these are industries, so Industry 1 up to Industry 80. So the net output of Industry 1 is the first column of the table on the right minus the first column of the table on the left. And you get all the outputs minus all the inputs of Industry 1. And if you add those numbers, what do you get? Does anyone have an idea? So the value of all the outputs minus the value of all the produced inputs. Who said so, Rachel? What did you say?
Is it the value of all the products produced in the...
No, it's the difference. We look at the difference of the value of the product. Yeah. Value added, very good. Not profit. Value added is labor costs plus profit plus taxes, right? So very good. You're actually doing better than at the conference I'm attending now. There only one person had the right answer, and here I heard it all over. So that's great. Now let's look at the at the products. Let's take the total output of product 1. That is the row sum of matrix V. And we subtract the total use, intermediate use of product 1. So the first row of the U table. What do we get?
Value added for product 1.
No, it's not value added. So it's the total output of product 1 minus the total use of product 1.
Surplus of...
Final
Surplus, that is...
surplus? Is it surplus of product 1?
Excuse me?
Excess production.
Yeah, it's called net output. It's also called final demand. Okay, that is the demand not exercised by industries, but by households, government, and net exports. Okay? Now, if you sum all the value added of the industries, you get the grand total of the net output table. And if you sum all the final demands, you get the net output as well. Okay? Now the sum of all the value added is called gross domestic income. And the sum of all the net output of the products is called gross domestic products. So income and products are equal for the entire economy, not for every industry. For example, business services produce an intermediate output, an intermediate input to the other industries, right? The contribution of business services to the gross domestic product in a very strict sense is zero, because households don't consume business services, okay? But a lot of money is earned in the business services. So that equality holds only in the aggregate, not per industry. All right. Let's carry on. We also need household expenditures in the data on the different products for the different income classes. We have 10 income classes. Okay, the poorest 10%, the next 10%, all the way up to the richest 10%, all by income. So that is a table too. It has 80 rows, one row for each product, but it has only 10 columns because we have 10 income classes. And we also know the income for each income class. That is an increasing series because they are arranged by income. Okay, so that is listed in a 10-dimensional vector, little y. That is just household expenditures by income class. And then we need the direct CO2 industry emissions. Okay, so that is the emissions of CO2 by industry. So we have 80 industries. So, and that is it's just convenience. That is specified as a row vector. So one row and 80 columns. And then little e is the summation vector. Little e is a column vector in which every entry is equal to 1. If you multiply a matrix by the e vector, you simply take all the row totals. And that is clearly handy, for example, to determine the final demand of the products. All right? Now, the purpose of this exercise is to impute the emissions to the final demand exercised by the 10 representative households of the 10 income classes. Okay, so that's what we're going to do. The U and V are from the Netherlands Statistical Office. The consumption expenditures too, but it's unfortunately from a different department. So the first is more about production, and the second is budget shares, which are obtained by interviews essentially. Okay, so we had to reconcile here and there, but I won't bother you with the complications of that. Now, let us look at the C table. So the dimension of the C table is we have 80 rows representing the products, and we have 10 columns representing the income classes. Okay? Now, if you take, say, the first row, and the C table has percentages, so they sum to 100% for every income group. Okay? So if you take product 1, which is in the first row, then you see which percentage is spent on product 1 by the different income groups. Okay? If that is a declining function, in other words, if the poor people spend relatively much on product 1, then such a commodity is called a basic necessity. Okay? So, for example, heating is indeed a basic necessity. If it is increasing, then it is called, does anyone know? Some people hear it, I don't know who, but I hear it's called a luxury. Okay? For example, health care is a luxury because people spend more on health care as they become richer. And when you become super rich, you can invest all your money in extending your life. Right. So there is no satiation there. And so basically, if you plot those percentages for each product, you get what are called in microeconomics angle curves. They tell you how demand will vary with income. All right. We have little time, and when I have little time, I just do the odd-numbered transparencies or whatever my mood is. And so these are the data again. We have the input table of the economy. We have the output table of the economy, also called use and make table. We have all those budget shares information in table C, which has dimension number of products, 80 by 10. And we have the emissions of the 80 industries. And what I'm going to do next is I'm going, first of all, the total emission is the row vector of emissions. So 80 numbers, the emission by industry 1, emission by industry 2, etc. And then post multiplied by the unit column vector with all entries equal to 1, because that's basically the summation factor. Okay, so you get D times E and you get the total emission of the economy. And now many people do economic analysis using input-output coefficients and things like that, but there are very many varieties of them, and some are good and some are bad. And I don't want to bother you with all that, because in general I prefer to analyze a problem by just using the data which are available and which you need, and that is UVC. So in principle, we should be able to express the footprints and D. So we should be able to express the footprints in U, V, C, and D, right? And all we have to do is we have to decompose the total emissions DE. Now, in between the D and the E, I'm going to insert a matrix, and it is the identity matrix. But I write the identity matrix as net output inverse times net output. Okay, so I have a matrix, I invert it, and when I multiply it by the same matrix again, I get the identity matrix, so basically nothing happens, right? That's the way I like to do research, that you sit down, you sit back, relax, nothing happens. And then I have E. And then the next thing, and if you're not handy with matrices, don't worry. I've checked the math, so there's no need to correct me. And but here it is. first of all, what I look at V minus U, which is in black, okay? And then I write that V minus U in black. I write it as I, the identity matrix, minus UV inverse, and in parentheses, times V. And that is indeed correct, because I times V is V, and UV inverse times V is U. So indeed you get V minus U, and I take the inverse again, okay? Now, V minus U times E are the row totals of the net output table, and that was final demand. Remember? I'd explained it before. So, and what's final demands? It's the sum of household consumption and other final demand. And household consumption is obtained by taking a weighted average of all those consumption patterns, okay, weighted by the income levels. Okay, not normalized. You actually multiply through by the income levels themselves. So it is matrix C, which shows the consumption patterns of the income classes, and I simply post multiply by the vector of incomes of the different classes. And then Z is other final demand, which is government demand, investment, and net exports. Okay? All right. So now, what I'm doing next is we have that. So in the northeast of that transparency, we have something in brackets, and then we have to take the inverse. Now, when you invert the product of two matrices, this is a trick, and I won't explain why. You not only invert each factor, but you also have to change the order of the matrices. Okay, so when you invert it, you first change the matrix in brackets on the right-hand side. That is the output table. So you get V inverse, and then you invert the matrix on the left-hand side, which is I minus UV inverse in parentheses. So that explains the second bullet, okay? Now, D were emissions. And when I post multiply by the inverse of the output table, what do you think you get? It goes a little far to explain all the details of it. Then I get emissions divided by the output table, okay? But the dimension of D is 1 by industry. And then I get something because of the inversion, which has dimension industry by product. So I get emissions per product. Those are called the direct emission coefficients of the products. Okay? The problem really is here that in traditional input-output analysis, of which some of you may have heard, the implicit assumption was that you can identify industries with what they produce. But nowadays, modern firms in modern industries produce each other products. Okay, so you have to sort it out. And the sorting out is done by taking that inverse. So the dV inverse are the direct emission coefficients. So the emission associated with the production of 1 unit of a product. Okay? And then in parentheses, we have UV inverse. Does anyone have an idea what that would be? U is the input table and V is the output table. So if you take the input table and you multiply through by the inverse of the output table, has anyone an idea? What would you get?
Input per output.
Yes, and that is Leontief's A matrix. Okay? However, it is calculated in one particular way. As I told you, there are many ways to construct A matrices. Basically, the problem is that you must shove all the secondary products under the carpet. And there are many ways to do that, okay? But here it results from the decomposition analysis. So that is the A matrix. But I prefer to stand it like that because, we have the data and we can calculate it directly. So now let me go on to the fourth bullet. Same expression. So that is I have the direct emission coefficients times the Leontief inverse. UV inverse was the A matrix, and I minus A time, inverted is the Leontief inverse. And then I post multiply it by C, which is the table with vectors with consumption expenditures percentages. Now, if we do this, we get for each, when you have first you have the direct emission coefficients, then you multiply through by the Leontief inverse, then you get what are called the embodied emissions. It's the same thing as the difference between direct labor coefficients and labor contents, as Marx, for example, used them. Okay, so dV inverse, the direct emission coefficient times the Leontief inverse, though that is emissions embodied in the units of the different products. And then I post multiply it by a basket of consumption goods of an income class, okay? And then I get the footprint per euro expenditure of that income class. And I repeat it for the next columns of the C table. So I get all the 10 footprints of the different income classes. And of course, I was very curious what that will show. That was just the first part of the equation to the right of the first bullet, because we had to apply it not only to consumption but also to Z. And remember, Z was public demand plus investment plus net exports. Now it's very interesting to do the same exercise, but it's not part of this paper. I did it in a different paper. When you have two ideas, write two papers. That's how I got to that big number. And that's actually a lesson I got from my thesis advisor, Wil Baumel, indeed. So you can also apply the footprints to the net exports. Okay. Now, for example, for the Netherlands, the footprints of the net exports are positive. Okay, so what the Netherlands export have a lot of CO2 content. There is much emphasis by the government on clean consumption patterns, and that's what the Dutch do, but very little pressure on business, because the government, has difficulty touching them. For example, one of the biggest firms in the Netherlands is a firm you probably know, Tata. Okay, and the emissions around that steel plant are very serious. And what happened now, the last couple of years, the inhabitants around Tata joined forces, went to court, and took Tata to court because made Tata responsible for health issues. And this has been a very lengthy process. And the court made a decision only 2 months ago, and the court sided with the people. So Tata is in big problems now in the Netherlands. They may move or whatever. And so governments may be weak, but the people can be strong. So anyway, by exporting stuff by exporting products, you import pollution. Okay, if you export steel products, then the receiving country enjoys that product, but they have exported, outsourced the pollution, right? So the trade in CO2 is the mirror image of the trade in products. And it depends on the footprints contained in it.
This assumes that the imports have same coefficient as the domestic country.
Yeah, that's a very good point. Yeah. Good idea. Paper. Yeah. So, let me not. I would skip every other transparency. So, here you are. Okay. Now, this I mentioned already too. Okay, I looked at the product of the 80 products with the greatest footprint, right? And that product is electricity, gas, steam, and air conditioning supply. Okay. So along the vertical analysis, you have the footprint. So that is the CO2 content of that, or embodied in that product. Okay, so not only the direct production, but also the indirect production. And on the horizontal axis, we simply have the 10 income classes. Okay. Now, when you look at this, you see that since this product also has quite a bit of, since this product has the biggest footprint, its price will go up the most of all the products when you introduce the emission tax. Okay, so who suffer among that tax? The poor, right? It's just a downward going curve. So that's good news to the poor people and bad news to the. It's bad news to the poor people and good news to the rich people. But again, in India, it will probably be different, because I have the feeling that the poor people in India spend very little on air conditioning, for example. So there it is. So this is just one product, and we have to do it for the entire basket. Remember, the seed table tells you what the consumption basket is. And now we're going to express the consumption baskets in terms of emission contents. Now here they are. So these are the footprints of €1 of expenditure by the 10 income classes. Okay? Mind you, the rich people will have a much greater footprint than the poor people because they spend more. But when you are interested in the effect of environmental policy on taxation and prices, you have to calculate the footprints per euro expenditure. Okay? And that is going down. So you see that gray dotted line in between? That is the regression line. Okay? So the regression coefficient is negative, and we are interested in is it falling with income? I mean, so when we look at the significance level, we take a one-sided test, and the p-value is 0.037, which is less than 5%. So it's significantly negative. Later on, we would like to use microdata because now all those 10 income classes have been aggregated. So maybe it's more appropriate just to look at the ordering. Is the ordering of the people by income the same as the ordering or in the opposite direction of the footprints? So then you need Spearman's coefficient. And then it's even more significant, 0.03 significant. 0.03 is the p-value, one-sided again. Okay, so the answer to the question is an environmental policy involving an emission tax bad for the relatively poor people is a ringing yes in case of the Netherlands. So in the working paper we had a question mark, but in the final version, which you have just seen, we removed that question mark. So conclusions, footprints must be calculated using the full system of national accounts, augmented with emission data. That combination is called NAMEA, National Accounting Matrix, including environmental accounts. I understand that in India, and that is the conference is about that. There are still some problems to get everything complete. The OECD, however, has a big database of countries where it is complete, like 70 plus countries. Input-output coefficients are implicit in the analysis, and they happen to be different than the ones published by statistical offices. I don't think that will have a big impact on the results, but strictly speaking, I didn't use input-output coefficients. I just used the use table and the make table, and the emissions and the household purchasing data. And regarding policy, at least for the Netherlands, indeed, there is tension between environmental policy and income policy. Thank you for your attention.
Can I have a policy with you? You take some questions, right?
Yeah. Markets. So, yeah, if you introduce the emission tax, then that in the case of Tada, for example, that would be quite enormous. And that would be a more generic way of selecting foreign direct investment. So we have different points of view, but they complement each other.
Yeah. Use the mic.
If not taxes, then what is the next most efficient way to reduce emissions? And like you said, taxes are regressive. So if they are not to be used, then what can be?
If not taxes, then what else?
No, I'm still in favor of using them. However, I believe that you must realize that you have to spend more on the social safety net, income policy.
I want to ask a question before we. So one of the conclusions is that emission taxes are regressive, and emission taxes you said are like just like VAT, value added tax. In India we call them GST, goods and services tax. So it's like a consumption tax. But isn't it true that all consumption taxes are regressive? I mean, for me, it wasn't very surprising because any consumption tax will pinch the poor more than the rich by definition.
No. It is true when you have a uniform tax rate, but the emission tax rate will not be uniform. It will be very low for products which have a relatively clean background in the entire production process, and it will be relatively high for dirty products.
No, sorry, let me expand. Let me explain. So, let's say you have a tax on food. Let's say.
Yeah.
Now, poor people tend to spend more part of their income on food expenditure, and rich people spend only 20%. Poor people spend 60% of that. So,
Yeah.
if you only have tax on food, let's call it, it's going to be regressive because the poor people tend to spend more. Same thing happens to air conditioners. In Netherlands, since it's a cold country, a lot of money is spent on heating your homes during winter.
Yeah.
And as a proportion of the budget of a poor person, that's very high.
Yeah, but
Therefore, those taxes are regressive, but that works for all taxes, right?
No. A tax on Rolls Royces, for example, is not regressive.
Okay. Yeah, point taken. Yeah.
Yes.
Did you observe in the consumption matrix that was created? Did you observe that different products were consumed differently by the different sections? Different not sections.
Yeah.
Classes of income?
True. Yeah, true. Because even when you combine those curves into the footprint curve, that was not monotonic, a footprint curve. Okay, so and that's known, of course. Not all commodities are either a basic necessity or a luxury goods. I mean, there are some commodities which are used quite a bit by the middle class and little by the poor and the very rich. Okay, so it can go all over.
So since they are consumed differently,
Yeah.
and we know that a certain section of society tends to consume certain set of products more frequent than other sections, then perhaps we can have different levels of taxation for them.
Yeah, sorry. What's your name?
Aditya.
So I'm going to just expand on Aditya's question. So I think, sorry, I'm cutting in. He's saying that since you know your fuel taxes are, emission taxes are regressive, and then you told me that if you put a tax on Rolls Royce, it's not regressive. So to combine these ideas, he's saying if you have different levels of taxation for different goods, knowing that some goods are going to be luxury goods consumed more by the rich and less by the poor, there'll be this kind of taxation will be less regressive. Is that doable?
Yeah, well, but in this here there will not be a uniform environmental tax here. The environmental tax will be proportional to the footprint. Okay.
So I think the point is that you cannot have different taxes because the same commodity is being consumed, which in this case is energy, or it's used for home heating. You cannot have differentiate between the home heating fuel consumed by the poor as against the rich. When Mr. Thijs says air conditioning, he's referring to heating the home, not air conditioning as understood in India. Right?
Yeah.
Right? Professor Pete, yeah.
Yeah, there one clarification. you talked about the embodied and the direct and indirect. So do I take it that this analysis is equivalent to what one would call as the life cycle computation?
Closely related, yeah.
Okay. And
Yeah.
the question I have is, why do you pose a question like this? I mean, our vice chancellor said in the beginning that it was provocative, and it was provocative to me because I think the modern public finance now looks at the optimal budget post Musgrave and Samuelson, does not look at regression and so on because the government needs revenue, right?
Right.
And the best way to do it is by being unfair. We know that. There's no way
He's saying that
fair in taxation.
taxation is going to be regressive always. So it's not proper to look at only taxation, but look at the overall optimum budgeting. Therefore, the revenue side as well. How we are spending on income policy.
And then work out the effect of the overall policy of the government. I would have thought that's the way.
Well, yeah, we can fall back on Paul Samuelson. I mean, you still have to decide what the tax rate will have to be of this CO2 tax, and the optimum tax in this case is that it is equal to the abatement cost of emissions.
I think the taxation, I don't want to get into the argument, but taxation should have a single policy. Let's not talk about trying to reduce emissions via tax. Taxation is for revenue for the government. Okay?
No. I don't think that would be the best purpose. First of all, I'm in general, I'm not always a big fan of governments. But in this case, the main objective of the tax would be to clean the environment. Abatement, filters, stuff like that.
Yeah, it's really up to
Hello, sir. My name is Arya. I'd like to apologize for the level of my question. It's very basic compared to all the questions that you asked. But my question is more mathematical. If you had to apply this model to any other nation,
Yeah.
and the number of industries change, the number of products change, or you had a lesser, the number of income classes change, do you think you'd see a change in your result?
Yeah, it may. That's an aggregation issue, basically, and yeah, I just we had to reconcile three data sources, namely environmental, national accounts, and consumer surveys, and we took the most detailed level of aggregation that is consistent with all of them. But yeah, it's a good question. But in practice, there's little choice. So you work at the most disaggregated level you can. The standard is pretty much the OECD accounts nowadays. So they will be most popular to do this.
And just to follow up, in India, where the level of income disparity is very high compared to a lot of other countries,
Right.
and you have a huge amount of poor and the population of the rich is very, very less.
Yeah.
How would you take something like that, sheer numbers into account when you're doing this, rather than dividing into income classes? If you had to consider just poor people and you had classification within the poor, how would you see the model change?
Well, that will be doable. I mean, you would have not 10 income classes, but probably fewer of them. And you could even make other distinction. You could look at the poor urban people and the poor rural people, for example. So you can, yeah, there's quite a bit of freedom there. Yeah.
And can you also talk about diversity? Just get to know.
Arya, let's other people ask us.
Uh,
He's available here. He's
so yeah, again, jot down my email address and pose any questions you have.
giving me last couple of questions. So yeah, first at the back.
So, do you think the idea of taxing countries based on their past emission levels is an idea worth it?
So she is changing the topic now. This is climate justice, international negotiations. So we are going away from Netherlands to. She's saying, is it fair to what tax countries on the past emissions? The industrial revolution happened in the West. All the carbon emissions are up there and being penalized.
Yeah, I think that's fair. That's what those inhabitants around Tata do. Tata has been polluting that area for since quite a long time, and the people have great health bills now. So, and maybe even psychological damage, and you name it. Yeah.
There's some dichotomy there that we don't mind importing steel, for example, but we don't want production.
Yeah.
No, you're sorry. This is expanding the discussion. This is a very sensitive topic about what is the right way of international negotiation on climate change and reducing carbon.
No, you have a point.
Yeah.
Yeah.
But it's not Tata which is polluting; it's just a factory.
For an emission taxation system, instead of taxing proportional to the footprint, would it be wiser to tax proportional to the item particularly? So, for an instance, if we move down to rural India per se, the amount of emission for cooking is very different than it is in an urban city. It's like coal versus induction. So while both of those are necessities, the footprints in the rural sector is going to be way higher, but the prices associated with it are going to be way lower. So instead of taxing the proportional to the emissions, would it be wiser to tax the items itself?
Well, that's what I do. I mean, I made a clear distinction between direct emissions and emissions embodied in the products. And those are the ones, the latter are the ones which are calculated. Yeah.
Well, I think we're running
So it will be automatic.
So we'll take last three questions. Keep them brief, please. Can we take calls together and then you and I one more?
Okay.
We'll take.
Oh, no, I have a bad memory, so let's do one at a time.
Okay. Yeah.
So, as you mentioned that emission taxes are regressive, but recently EU announced its CBAM policy, carbon border adjustment mechanism. So how that is in sync with your research?
Is CBAM also regressive? I think that's the question.
No, but your research is based on the
Netherlands.
The production process, but CBAM is on the final production.
Imported.
Import.
Yeah. Okay, yeah, I have been criticized before from this corner by neglecting international trade. I admit guilty. Next question.
Hey, no, I can't let you go. You have to answer. What do you think of CBAM? Is it, do you agree with it or disagree?
No, I
Even
think
though you live in Europe. So.
It is a part of EU.
No, let him answer.
in principle, yeah, we had it at the conference I'm attending now here with statisticians of the statistical office of this state. And in principle, it makes sense to levy an import duty on things which pollute the environment, if only because if, say, CO2 is emitted abroad, then sooner or later it may reach Europe by the wind.
Thank you. No, but, so what he's saying is, hint is let us have a huge stiff import duty on Tesla cars.
Yeah.
So you mentioned the emission taxes will cause an increase in the prices. But is this a short-run effect? And will in the long run firms be incentivized to
cut costs by cutting the tax itself and producing products that have lower footprint.
Yeah, that would be great. Innovation. Yeah, I'm all for it.
The long-term
Yeah,
effect
yeah.
of emission taxes, can you predict what will happen?
Yeah, there will be an incentive to find cleaner modes of production. Yeah, that's exactly what you want.
I think the last question, this lady.
Sir, is it possible to design emission tax policies in a progressive manner?
Can emission taxes be progressive?
Like, is it possible?
No, I wouldn't do that. The tax better be a direct reflection of the pollution contents of the products. It will induce people to change their consumption pattern. For example, the poor people in Holland, I mean, this has happened quite a bit already because of the war in Ukraine. So we were fairly much dependent on Russian gas. Okay, and that stopped, and the price of gas went up. So that's the same thing, and the poor were hurt. And what many people did, they put the thermostat a couple of degrees lower. And that is environmentally friendly.
Okay. We need to wrap up. Should we take one more question?
Yes.
Okay, only one. You have to choose who. Maybe the lady, yeah.
How do we incorporate the factor of time into your study?
Factor of time?
Yes, like maybe starting from a very
I'll make it dynamic, you mean?
exactly.
You're tough cookies. I have to bring in international trade. I have to bring in investment. Yeah. I don't know. Why don't you think of it?
I would wonder if it would, again, a lot of international trade would be included.
Yeah. Okay. Yeah.
No, that's true. I think we should wrap up now. But before we wrap up and I give it to Kunal, just two comments I want to make. First of all, or three comments. Firstly, he said that the result may be different for India. This is only for the Netherlands data. So that's one point to keep in mind because in India, the consumption of emission intensive goods by the relatively poor people may be lower than others, rich people. So actually, it may not be regressive. May not be. But second point is that the same exercise can be done for India. So those of the young researchers or even for your internship or your research paper, you can look at it. I think much of the data is available. He's been working with the Department of Economics and Statistics of Maharashtra State Government, but we have this data. We can do it at the state level, we can do it at all India level. So you are encouraged to look at this. And last point is, remember the point that he made, very important, that just because Tesla is said to be quote unquote zero footprint, in fact the embodied footprint may be very high, not just the batteries. Remember the aluminum is made with extremely electricity intensive process. And the batteries have to be charged, which need electricity, which is by coal burning. So instead of India giving them a huge subsidy and a red carpet welcome, and also like you said, the Rolls Royce, the Teslas are going to be consumed by rich people. So considering all that, I hope you can think about instead of a big subsidy and PLI, we should think about a huge import duty on Tesla cars. But I just conclude there. So over to you, Gunda.
Thank you, sir.
Yeah,
Thank you, Professor Tenra, for such a comprehensive explanation of the table that you gave. And sir rightly explained today that how emission taxes are regressive for the Netherlands, and I believe the same might be true for other developed European countries, or we could write a paper on that. And one very interesting thing that sir pointed out today was that when you export a product, you import the pollution that comes out of the production for that good. Now, this will definitely hold true for the case of India as well. And I think we should be doing such research and analysis and making such decisions for India as India looks forward to become the manufacturing hub after the coming up of especially the China Plus One policy. So I think these research will hold much gravitas in the future. So thank you so much, sir. I would now request BC sir to please present Professor with a token of appreciation.
Oh, wow.
You already got this.
Oh, yeah, I have it. Thank you.
You already gave.
Yeah.